Good morning, everyone. We'll call this hearing to order, and I want to thank everyone for joining us today to examine the state of small business economy. I know some of our witnesses have traveled here for a pretty good distance, and we appreciate you being here very much. Thank you. Being a small business owner in America, it's a tough job. No matter what your business is, you must wear a lot of different hats. In addition to doing what you do when you went into business for the first place, you probably have to tackle responsibilities like being a tax accountant, advertising executive, regulations expert, fundraiser, and human resources expert as well. Yet throughout our history, entrepreneurs in America have done all these things and a lot more. Recently, though, the business of being in business has gotten a whole lot more difficult. Last year, Gallup released a poll outlining the most significant concerns facing America's small businesses. Small business owners have a very simple message for Washington, and that is get out of our way. Entrepreneurs in this poll pointed to excessive government regulation, lack of available capital, and low consumer confidence as the biggest hurdles small businesses have to overcome. And this poll mirrors numerous trade association, think tank, and national media polls that say the same thing. Small businesses want Washington to let them do what they do best. Earlier this year, the U.S. Chamber of Commerce released a poll showing that the vast majority of small businesses believe that the national economy is on the wrong track. Nearly 2 out of every 3 do not plan to hire in the coming year due to regulations and the general uncertainty in the national economy. 78% of small businesses surveyed reported that taxation, regulation, and legislation from Washington make it harder for businesses to hire more employees. The uncertainty is coming from them from all sides, coming at them from all sides, and I think we need to be doing a better job of restoring confidence to entrepreneurs and consumers alike. Adding yet more doubt to the economy is the rising federal deficit and the financial crisis abroad. We see firsthand how out-of-control debt can destroy economies all over in Europe. This can impact our economy through decreased exports and the exposure of American investments to losses overseas. Small businesses remain uncertain not only about the U.S. economy, but about trouble in the world economy as well. This economic uncertainty disproportionately impacts small businesses more than larger businesses because larger businesses have the resources to deal with a rapidly changing economic environment. We have a real opportunity to enact changes that give small businesses the tools they need to lead an economic revival. And government doesn't create jobs to produce long-term economic growth. The private sector does. The faster Washington releases the reins, the faster we will see Americans back on the job and put our nation back on the path of economic prosperity. And again, I want to thank all of our witnesses. I look forward to hearing your testimony, and I'll turn to Ranking Member Velasquez for her opening statement.
Thank you, Chairman Graves. By almost any measure, conditions for small firms are better today than any time since the recession ended in June of 2009. According to the Federal Reserve, banks loosened credit restrictions for small businesses every quarter in the last year. Similarly, the Thomson Reuters Small Business Lending Index showed an increase in borrowing by small firms for 5 straight months through the end of 2011. There has also been a steady decline in delinquency and defaults on small business loans for much of the past year. These conditions are a significant reason why the NFIB Index of Small Business Optimism registered the 4th straight monthly increase in December. Last month, 9% of small business owners reported plans to increase employment, the second strongest reading since 2008. Even with this progress, a great deal of work remains to be done. Despite adding 1.6 million jobs to the economy in the last year, federal policies have not been sufficient to overcome job losses incurred in the recession. The unemployment rate, which has fallen over the past year, is only projected to reach the low 8% range by the end of 2012. Clearly, our optimism must be tempered by the reality that we still have a long road ahead of us, with millions of Americans who are seeking jobs unable to find it. Members of this committee know better than most that small businesses will be critical for job growth. In particular, one group excels over others. Startup businesses grow faster, create more employment opportunities, and are more innovative than older, more established firms. While startups account for only 3% of U.S. employment, they are responsible for nearly 1 out of every 5 jobs created year over year. And according to the Kaufman Foundation, the net new jobs from startups can be credited for all the jobs growth in the U.S. over a stretch of roughly 30 years. If we want to accelerate the recovery, steps should be taken not only to assist small businesses, but also to target help to high-growth startup firms. Unfortunately, this is one area where federal policy continues to lag. While general credit conditions have improved, lending to startups and early-stage businesses remains tight. Last year, the number of small loans to smaller firms, those of $250,000 or less, in the SBA 7A program fell by over 50% compared to pre-recession levels. With that said, small businesses of all varieties remain critical to our economic health. Today, I look forward to hearing both anecdotal accounts as well as empirical evidence about the state of the economy. In doing so, this committee can identify what is working as well as areas where entrepreneurs still face challenges. Let me thank all the witnesses who traveled here today for both your participation and insight into this important topic. I yield back. Thank you, Mr. Chairman.
All right, our first witness today is Dr. Dennis Jacoby, who's the chief economist at Gallup. With 20 years of experience working with some of the world's best-known financial firms, he leads several of Gallup's key economic tracking measures. Dr. Jacoby received a Ph.D. in economics from Virginia Tech with major areas of specialization in money and banking, public finance, and public choice. Thank you for being here today with us, Dr. Jacoby.
Thank you, Mr. Chairman. It's a pleasure to be here, Chairman Graves and Ranking Member Velasquez. What I'll do is just quickly go through some of the key points of my testimony. We have a lot of data moving very quickly. What I want to do is cover 5 quick points. The first being that I think we're at a critical juncture for the economy from our behavioral economics data, and it provides us with an opportunity and also a risk, of course. Second, we just completed a poll with Wells Fargo Gallup poll that we do quarterly every year, and we found the highest optimism we've found since July of 2008. So that's a really good opportunity in that context. We found their hiring intentions to be the best they've been since January of 2008. So it's another kind of opportunity where people are looking forward to 2012 in a very optimistic way. We also found in our surveys some key obstacles to their doing that hiring and to expanding. And then I have a suggestion for you from our sort of behavioral economics and polling analysis. So what we do is every night we ask about 1,000 Americans across the country their opinions on the economy. We ask a lot of other things, but we're the only polling firm that goes and does that every night. We've done that consistently since January of 2008, so now we have a pretty good behavioral economics database. From that, for example, we create a consumer confidence index of our own we call economic confidence. And unlike what you heard from the conference board, our numbers show that consumer confidence remains as high as it was prior in May of last year. So it's not the downturn that you've heard recently. And we think our numbers, about 30,000 interviews a month, are pretty impressive in that kind of measurement process. In terms of job creation, we create something we call a job creation index and we ask firms, employees, whether they're hiring or firing. In that process, we measure over time their intentions to hire. What we're finding is employees are saying that hiring intentions are the best they've been since 2008. Again, another surprising number, actually September of 2008. We also measure unemployment, and what will happen Friday, I don't know, because there's a lot of change taking place in what the BLS does on an annual basis. But our number comes out to be, as I have in my testimony, at mid-month it was 8.3%, which is seasonally unadjusted. Just today, our number comes in at 8.6% in terms of the unemployment rate. More important, if you see in my testimony on the first chart in there, I have 18.1% underemployed. our underemployment measure takes the people who are unemployed and adds to the number of people who are working part-time but want to work full-time. That number, just over the last 2 weeks, has gone up to 18.6%. So again, a critical kind of juncture and a big jump in a short period of time. If you look at our index, which is a couple charts further into my testimony, you see that huge jump in terms of small business optimism. That number, the 15, is, as I said, the highest since July of 2008. And on the next page, I sort of outlined for you the gap in terms of hiring intentions, which again are as good as January 2008. When we survey small business owners, which we do routinely, we ask them why they are not hiring, and I outline in my testimony a sequence of different questions as to why people aren't hiring right now. And obviously, they always come back, small business owners come back, they'd like more revenue, they'd like more cash flow, that kind of thing. But one of the key items that they continually repeat, no matter how we ask the question, is that they are concerned about government regulation. Whether that's true in reality or simply true in perception, they continually repeat that as one of the reasons why they're not hiring. So that leads me to sort of two quick conclusions. One is that I think that given the juncture of small business with their optimism right now, anything that you could do to help that optimism and that psychology would be beneficial, and simply a moratorium on regulation so that you don't discuss what's good and what's bad, but simply taking away that psychological constraint, I think would give a boost to small business at this point in time. And then I also mentioned that we're very concerned about the high level of unemployment and underemployment. And so we think that we should consider something that helps get small businesses into the process of bringing in interns and those kind of workers to learn, because we're afraid that a lot of people are not getting the skills they need. And we keep surveying small businesses. They tell us that they need skilled workers. So thank you very much. I'd be glad to answer any questions.
Thank you, Dr. Jacoby. Our next witness is Peter Ferrara, the Senior Fellow for Entitlement and Budget Policy at the Heartland Institute. He served in the White House Office of Policy Development under President Reagan and as Associate Deputy Attorney General of the United States under the first President Bush. Mr. Ferrara is a graduate of Harvard and Harvard Law School, and welcome to the Small Business Committee.
I press the button here. Mr. Graves, Ms. Velasquez, members of the committee, thank you for the opportunity to testify this afternoon, actually. I have sort of a macro view of the economy and as it affects small businesses and everyone else, actually. Even President Obama's budget projects that the federal government's gross federal debt will soar to 100% of GDP by 2020. The Bank for International Settlements estimates that this gross debt will accelerate even faster, hitting 200% of GDP by 2022 and 300% by 2030. Under current policy, CBO projects that even the smaller national debt held by the public would rocket to 185% of GDP by 2035 and to 200% by 2037, twice as large as our entire economy. This national debt would explode further to unprecedented levels of 233% of GDP by 2040 and to 854% of GDP by 2080. What this means is that America is almost at the same disastrous level of debt as Greece, and on our current course, we will soon be there. Indeed, on our current course, we will rocket right through that level and well beyond. Now, most people do not know that soon after World War II, federal spending as a percent of GDP has been fairly stabilized and has remained stable at around 20% of GDP until recently. Official U.S. government projections have shown for some time now that over the next 30 to 40 years, federal spending as a percent of GDP will double to 40% or more. Financing that would ultimately require at least doubling every federal tax. Add in continued state and local spending growing towards 15% of GDP, and government in America will consume more than half of the economy. In fact, it will be more than that because the economy will collapse under that burden, and the percent of spending as a percent of GDP would be even higher. This would fundamentally transform America into a static, low-growth, socialist European state. America's traditional world-leading prosperity and opportunity, the American dream, would be gone. And, of course, small businesses would be the first and chief victims of that economic future. But there is good news if we would open our minds and think anew. As I showed in detail in my recent book, America's Ticking Bankruptcy Bomb, by modernizing our old-fashioned tax and redistribution entitlement programs to rely instead on 21st century capital, labor, and insurance markets, we can achieve all the social goals of these entitlement programs far more effectively, actually serving seniors and the poor far better at just a fraction of the current cost of these programs. Such reforms would involve powerful market incentives driving the programs to contribute further to booming economic growth and prosperity rather than detracting from it. Ultimately, these reforms altogether would reduce federal spending by half or more as a percent of GDP of what it would be otherwise, solving the long-term fiscal problem. Yet because these reforms would involve fundamental structural changes that actually serve the poor and seniors far better, rather than simple-minded benefit cuts, they would be politically feasible. Modernizing the programs to the remarkable benefit of the populations they serve, which the book shows is possible by harnessing markets and incentives to achieve the social goals of the programs far more effectively, is the political key to unlock the door to necessary entitlement reform. Exhibit A, the first example of this would be the 1996 welfare reform that reformed the old AFDC program. That program previously was based on a matching federal funding formula. The more the state spent, the more the federal government would send to the state, basically paying the state to spend more. That formula was transformed into finite block grants. The federal funds for the states were fixed by a formula, fixed finite amount. If the states spent more, the states had to spend it out of their own pocket. If the states reformed the program and spent less, they could keep the money. Under those incentives, we had remarkable results. Two-thirds got off the program within a couple years and went to work. They saved the taxpayers by 50% of what it would have cost otherwise after a period of about 10 years. Yet the poor gained. Their incomes are documented to increase by 25% because so many more of them were working. There are nearly 200 more federal means-tested welfare programs. This same reform could be extended to each one of those. They are estimated to cost $10 trillion over the next 10 years. I estimate that extending those same reforms would save $4.1 trillion. See, again, the poor gain, the taxpayers gain as well. Another key example, personal accounts for Social Security. You would shift the spending, and it's an enormous reduction in federal spending. You shift the spending from the public sector to the private sector. Yet the seniors in the future would gain higher benefits rather than lower benefits because market investment, long-term market investment returns are so much higher than what Social Security can even promise, let alone what it can pay, which is based on no savings and investment at all, but just tax and redistribution. So again, seniors gain and the taxpayers gain because the tax burden, eventually you could expand those personal accounts to displace the payroll tax entirely, financing all the benefits that are financed by the payroll tax today through those personal accounts. So that's another example. Modernize the programs, serve seniors far better, and solve the long-term fiscal problem. Same would apply to Obamacare, and I could go into that. Thank you very much.
Yeah, it is my pleasure to welcome Mr. Martin Bailey. He's a senior fellow in economic studies at the Brookings Institution. He's also a senior advisor to McKinsey & Company and an advisor to the Congressional Budget Office. Dr. Bailey previously served on the Council of Economic Advisors, including as its chairman from 1999 to 2001. Dr. Bailey earned his PhD in economics from MIT. He has taught at MIT, Yale, and the University of Maryland. Welcome.
Thank you, Chairman Graves, Ranking Member Velasquez, and members of the committee. It's a real privilege for me to be able to speak here today. Let me start on the overall economy. It's still fairly weak, although I think it is doing better than it was. I think we are going to see somewhat stronger growth in 2012 than we saw in 2011, and I think the report from Dr. Jacoby supports that. Optimism is beginning to rise both among consumers and among small business. Nevertheless, I would not expect to see more than about 2 to 3% growth in 2012. Why are we having such a slow recovery? Housing. It's got an awful lot to do with the fact that we ended up in this housing bubble. We all spent too much money thinking that we were richer than we were. We built too many houses. And as the bubble burst, we lost a lot of household wealth. And so we really are still experiencing the legacy of the housing bubble. Also, recessions develop their own kind of inner dynamic. You get a loss of jobs, a loss of income, then consumption is weak. That means that sales are weak, so hiring and investment are weak because sales are weak. And so then, that goes around again. and we've dug a fairly deep hole, and it's taken a long time to get out of it. I think it would have been helpful, actually, if everyone, policymakers and economists, had realized just how long it was going to take to get out of this mess. It really was the most severe recession in a long, long time, and that's just not solved very easily. I think there is an upside. I think we could get more than 2 to 3% growth if confidence begins to build. This is about the time when you might expect to see the recovery really begin to break out on the upside, so I do have some confidence. On the other hand, we have some risks too, including Europe. If Europe goes down, if we get a lot of financial failures in Europe, I think it will be very hard for the U.S. not to get dragged down. We have tensions in the Mideast. If oil prices were to jump, that would be another serious problem. Turning to small business, as you know, it's been very hard hit. I have some charts in my testimony. There were fewer startups and a lot of stress among existing businesses. Why are there fewer startups? Well, obviously, when you go into recession, it's just not as attractive to try to start up a new restaurant, a new dry cleaner, whatever it is, a technology company. Those things have been much less attractive in these recession conditions that we've had. Another issue is the loss of homeowner equity. Of course, we've all experienced that, but small businesses, typically, they will take money out of their homes, or they will pool together. A few partners will get together, get a loan against the value of their home to fund a startup. And so that money has not been available. Also, bank credit, which is, has been tightened and then loosened, as Ms. Velasquez said, but it's still, I think, more difficult to get funding if there's a lot of uncertainty if you are a small business. So lack of sales, lack of credit, those have been the things that have hurt on the startup side. Now, there are concerns about regulation, as I think you'd expect, and taxes, and the deficit. I have concerns about all of those things, so I think those are important issues. And let me talk about the regulation issue. The one that's kind of gotten the biggest hit has been the Affordable Care Act, and there's just tremendous opposition to that, which to me seems out of proportion to the content of the Act itself. There are no requirements on businesses with 50 or fewer employees to provide health insurance, nor are they required to pay a penalty if they don't. And that's actually most small businesses, so they're not really affected that much. Not only that, there was a report, which I hadn't seen when I wrote my testimony, by the Kaiser Family Foundation. Of the companies between 51 and 100 employees, 92% of them are already providing some kind of health insurance benefit. So we're not telling them, start anew and do something you're not doing. And many small businesses, those under 50, could get some subsidies and actually help them along. So the Urban Institute study, for example, argue that actually small business on balance might be helped by the Affordable Care Act. Now, I understand why if you are small business, they say, oh, this is a problem, this is terrible, this is all this regulation, because I think that's what they hear all the time. That's what everybody's saying. So, that's something that they get that feeling. I'm running out of time. Let me just say what could be done. Obviously, if we can improve the overall economy, we'll improve small business as well. So some modest continued stimulus. I think it was a good idea to do the payroll tax, and we should extend that for the whole year, find a way to do that. I think on the credit side, we should work with bank regulators. We don't want to give away money and have a lot of bad loans again, so let's not go back to that. But I think banks and regulators, there is some demand for credit from sound businesses, and so more could be done in that area. I think the SBA has done a good job, and I think we should think about maybe ways to get a little more money to the SBA to provide guarantees or to do some direct lending. I would also just finally mention that the Startup Act of 2012 has been proposed in the Senate. It's got a number of different things, and I don't agree with everything in it, but it does suggest we should simplify and streamline some of the permissions and regulations, some of which happen at the state and local level. So they're really, that's an area where maybe the federal government and state and local governments can cooperate. I think it'd be good to get more visas for skilled people, because I think they are job creators, and we need to do more to help the skills of the American population so that small businesses can find the people they need. Thank you. I'll stop there.
Thank you, Dr. Bailey. Our next witness finishing up today is Dr. Mike Frederick. He's president of Manitowoc Custom Molding. Did I say that right?
No, but that's okay. Oh, I'm sorry. Nobody says it correctly. It's Manitowoc.
Manitowoc.
Yes.
Manitowoc. He is testifying on behalf of Small Business and the Small Business and Entrepreneurship Council. Mr. Frederick has owned MCM, a custom molder of precision thermoset plastic parts, for 10 years. He received his degree in nuclear engineering and his MBA from the University of Wisconsin in Madison. Thank you for being here today. We appreciate it.
Thanks a lot. I'm not a doctor, by the way. Just a regular guy.
Velasquez pointed that out to me. I apologize for that.
Thanks a lot for having me here, and it's an honor to come and speak before the committee. As the chairman said, I've owned the company for 10 years, and the company was started in 1983. It's had two owners, the guy who started it, and I bought it from him in 2001. And none of our products show up in anything that you'd ever notice, because they're all products that go into somebody else's product. But we have a good diversity of industries that we sell to. We have, I'd say, consumer products, maybe 25% of our business, industrial, 35, aerospace, 20, that's growing, and defense, 15, and then we have some cats and dogs. So we have a pretty good view of how the general economy is doing. And I can tell you that last year, 2011, we had the best year we ever had. So you'd think everything is rosy. I'm happy. I'm here to report to you that the psyche of small businesses is good, and I just can't say that. I have to say I've never been more concerned with our prospects as a company than I am right now. And I used to worry about all sorts of things that are related to the business, customers, serving customers, on-time performance, quality, things like that. But now I spend the majority of my time worrying about the country, because we're here. And unlike multinationals, we can't diversify out of here, and we're stuck. And we've got some bad things going on in this nation, which will affect everybody, not just small businesses, but everybody. But it'll affect small businesses. So when asked to do this, I highlighted some of them, some of the areas which are going to affect us. And regulation is an issue, and you say, yeah, everybody's worried about regulation, but here's some things that affect us. Dodd-Frank, for example. I called, we deal with a bank in Green Bay. It's a privately held community bank. So I called the owner, who I know. I've known him for 20 years. I said, Bob, how's this Dodd-Frank thing going to affect you? He said, I don't know. They're still writing it. The obvious question is, what did everybody vote on? But it's not going to be good. They have one compliance officer for the entire bank, and this is just more red tape compliance that will make it difficult for small businesses, whose primary source of capital, by the way, are banks, commercial banks. And I like dealing with community banks, because at least the people make the decision that you're talking to. So that's one area that I'm worried about. Healthcare is another one. We just repriced our health care insurance, and you're right. A lot of the small businesses between 50 and 100 people have insurance. We have a high-deductible HSA plan, and this year it's hard to go out and reprice these things and get quotes, because you have to do a survey of everybody. But we did that this year because we wanted to try and get a better deal. So we went to 5 new companies that were not that were new to us, and asked them to quote on our business. Every one of them, all 5, quoted 85% premium increase, which is the maximum they can quote. I don't know if that's a Wisconsin law, but in Wisconsin, they can quote 85%, which means they didn't want the business. The company carrying it right now is raised the price 14.5% for a premium. And the maximum they can raise it according to state laws is 15%. So they raised it the maximum. So what we have is a situation where we have no competition anymore from carriers, from insurance providers, because they're just not going to quote. Because I think there's so much uncertainty with that they're holding firm. And the people who are stuck with us, the one company, they can raise it 15% a year, and that's probably what we're going to see. So that's a concern. The other issue I have is, running out of time, inflation. And there hasn't been much, but there's going to be, has to be. If you look at the amount, at what the Federal Reserve has done, they've created a bubble of money, which eventually will flow into the system, will create inflation. It will raise our prices of raw material. Our raw material is 45% of our cost. And you can say, okay, well, just pass it on to your customer. It doesn't work that way. Sometimes we have contracts, and they often have other opportunities to source that either domestically, change the material, or source it internationally, which is more likely going to be the case. So I'm worried about inflation. Dependency. We have a country that is becoming dependent on the federal government. I've seen this in our business, and there's a new dependency class that I call the happily unemployed. Their job is to stay on unemployment. And I know this because every Friday they come into our place because they have to show that they're actively seeking work, and what they're really actively doing is trying to stay on unemployment, and they're very happy there. You know, they work part-time, they work for cash, they get food stamps. Why work? And I know jobs are available in Manitowoc. Good jobs, manufacturing jobs. Can't fill them. Can't fill them. They're $11, $12, $13 an hour jobs. Can't fill them. No applicants. That's a problem. And finally, my biggest fear is the federal debt, because that has the potential to get us all. Forget all the regulations, all the little nibbling around the edges. If you do not get a handle on federal spending and deficit spending, we're all gone. We're past Greece. Don't use Greece as an example. We're past Greece. People will still lend us money. That's the only difference. But if you look at the statistics, we're worse than Greece. That concludes what I have to say, and thank you very much.
We'll start questions, and we'll start out with Ranking Member Velasquez.
Thank you, Mr. Chairman. Mr. Bailey, in your testimony, you highlight the important role that startups play in driving economic growth. And according to SBA data, less than a third of SBA lending goes to startups. Are there ways to change this trend and encourage lenders to make more credit available for startup businesses?
Yes, I think there is a case. I mean, startups are really important because a lot of small businesses do fail. There's a lot of turnover in small business. They create a lot of jobs, but there's also those that do not succeed. So we need that flow of startups to keep employment from growing. It's obviously difficult to get money if you're a startup because you don't have a track record. And as I mentioned earlier, you used to be able to maybe use real estate collateral, and now it's more difficult to do. So I think if it's done through some kind of either loan guarantees or through the direct lending program, some kind of small business bank would be a possibility, which wouldn't take a lot of money but could provide much needed additional funding for potential growth companies that would help our economy.
Yeah, you mentioned, and Dr. Jacoby, that we have not seen the number of startups this time around during this last recession as we saw in the 80s, 70s, and 90s. And a lot has to do with access to capital. You mentioned in your testimony that real estate represents the single largest source of collateral for loans to startups, and the drag in real estate prices has significantly affected the availability of credit for these firms. So with housing prices unlikely to recover in the immediate future, what should be done to take the place of this asset in securing capital for startups?
Well, that's a hard question. I don't know if we can operate on a very different model. I do think that there are many small businesses that provide a good opportunity for the private sector. So I think private sector banks, I know some folks in Wall Street that are actually making money by packaging loans from small businesses. So we do have other resources, people willing to take risks on a small business if it's a good bet.
Would you see, well, what we have seen and the senior survey of loan officers and the Fed report that was just recently released show that credit standard has been eased and that more credit is flowing to mid-size and large firms.
Right.
The problem and the gap is on
the small
startups,
size.
and they are the ones that really create the jobs in this country. So would you see a direct lending role for SBA?
Yes, I would.
Okay. Mr. Bailey, according to a Kaufman Foundation survey, 40% of the respondents said that the biggest obstacle in the way of high growth companies is finding qualified people. 21% said that managing fast growth, accessing capital 16%, and the sluggish economy 13%. They mentioned that those are all obstacles. Regulatory uncertainty and taxes were only 3% and 4% respectively. Why do you think there is such a disparity between this poll and the Gallup poll about the top conditions facing companies?
Well, I think I mentioned what I would point to as the main reason, and that is that everybody's talking about regulation. And, you know, we do have a lot of, this is an election year, we have a lot of discussion of regulation. I think there are things that one could do to improve the regulatory environment. So I'm not saying I want to dismiss the potential for streamlining regulation, making it easier for small business to operate. I think we'd probably all support that. But I do think this regulatory issue has really been blown out of proportion. I've done a lot of comparisons between the U.S. and other countries, and the U.S. is still pretty high on the list of countries where it's relatively easy to start a new business. If you look at the World Bank list, much harder in China or places like that. So we are still a good place. I still have a lot of confidence in this country as a place to start a business and where enterprising people will be able to. And yes, we should do whatever we can to make sure that the regulatory environment is doing its job properly and not getting in the way of growth. But I think the reason it's become such a football is because that's what people want to make it.
Yeah. Do you, Dr. Jacoby, would you care to comment?
Well, polls will differ, and what we've done is we've tried to ask a series of different questions over time since last year. And I think it's clear that there's a psychology that has developed. And, you know, you can argue about the reality. The psychology is that and we actually have done some individual interviews with small businesses just recently on a sort of long-term, sort of long interview. And they come to this without urging. So whatever the psychology is, it seems a positive if that fear could be halted for some period of time. Normally, regulations don't play this big a role. The problem is that the sector is so threatened, it's so weak. We've been 4 years in this process, and people are recovering, but it's a slow recovery, and small businesses are struggling. And so things that they normally would be able to go through and work their way through are much harder right now. And I just think that's raised the issue.
Thank you. And I don't know, but maybe anyone who would like to answer this question, but again, it might be the psychology, the explanation, because people are saying that community banks, and your community bank, you just mentioned community, do you know how much assets does it have, your community bank? I
do not, but I can say they're the largest commercial bank in Green Bay, and I don't know how many millions of, they have to be 300-400 million. I'm guessing no.
So no more than $1 billion in assets.
No.
Right. So I am a member in the Financial Services Committee. I was, involved with a Dodd-Frank regulation, and every place we go, when you listen to bankers, the first thing that they say, if they are community banks, is that it is having a negative impact in their lending practices because it's creating uncertainty. But the fact of the matter is that community banks, for the most part, are exempted from the regulations of Dodd-Frank. Those banks who have assets less than $10 billion are exempted. So community banks are the one lending to small businesses. So when we hear that small businesses are not getting access to capital and we blame Dodd-Frank, I will invite people to really go to the law and review if those regulations will apply to those banks.
It's not.
And I yield back.
Go ahead.
It's not just Dodd-Frank. I mean, I would not want to be in the banking business based on the amount of regulations and control that they have. And I'll give you a good example of the same bank. They did not need to, but they took some of that TARP money, and they tried to pay it back. Wouldn't let them. No, you cannot give it back. Your ratios were good. Didn't have to take it. You can't give it back.
Well, the TARP money for those community banks was to provide access to capital to small businesses, not to pay back.
They didn't need it. They have plenty of access. I'll give you another one. They used to be a publicly held bank, and Sarbanes-Oxley converted them from public to private, which also restricts their access to capital, which restricts their access to lending to small businesses.
Could I address this, since she asked if anybody could answer this? Could I don't think psychology has anything to do with it. You've got to create a booming economy, and the psychology takes care of itself. But the recovery is, the problem is the recovery is long overdue, and whatever signs of life in the economy there are too little too late. The National Bureau, the statistics show that since the Great Depression, recessions in America on average have lasted 10 months. The longest previously was 16 months. Here we are more than 48 months after the recession started, and there's still no real recovery. Moreover, you can't say, well, it's because the recession was so bad. Historically, the worse the recession, the stronger the recovery. So based on these historical standards, we should be nearing the second year, the end of the second year of a booming economy by now. And it's the fact that there's been no real recovery. That's what's destroying the psychology of small business. If you follow pro-growth economic policies, you will get a booming economy, and small business will have fabulous psychology.
So, Mr. Ferrara, what you're saying is that this administration didn't know how big a hole was dug by the previous administration, right?
No, that's
and
not
that
what
the
I'm saying.
stimulus package that we put in place was too small to produce the kind of results that was needed, given the big hole that was dug.
No, that's not what I'm saying. My estimate... well, no, I would never say that. My book, America's Ticking Bankruptcy Bomb, shows that just the opposite. I can tell you exactly how many jobs were created on net by the stimulus. It was 0.000, because if you take $1 trillion out of the economy and spend $1 trillion back into the economy, you haven't done anything for the economy on net. It's just it's old-fashioned, outdated Keynesian economics, which is a proven failure. And in fact, it probably is a net drag on the economy because the private sector will spend that $1 trillion more efficiently than the public sector.
Mr. West.
Well, thank you, Mr. Chairman. Thank you, Ranking Member. And thanks for the panel for being here. It's very interesting what I heard at the beginning and by the time we got to the end when we talk about psychology. You started out, we're talking about optimism. By the time we got to the end, we're talking about uncertainty and lack of confidence. So my question is, especially I have Christina Hebert here, who is a Chief Operating Officer of a small business as part of the marine industry of South Florida. She's also the Executive Director there. Let me read you a summary of a report that she just gave to me that follows up from the Fort Lauderdale Boat Show, which is the largest boat show in the world, as a matter of fact. The recreational marine industry needs assistance facilitating communications with all agencies whose regulations affect the industry. Second summary point, the United States is unable to attract 90% of the large yacht economy to this country due to the onerous regulatory environment. Attracting this business to the United States would mean a massive influx of spending and jobs. So I hear about optimism. I hear about lack of certainty, lack of confidence and uncertainty. What can we do up here in Washington, D.C. to bridge the gap between those 2 points?
Well, what I was trying to say is that right now we have an opportunity. and the optimism is very tenuous. That's why I think it's a very fragile kind of optimism. We had some of it a year ago, and we need to do something to keep the momentum of that optimism going. And that's why I was saying just freeze regulations, because whether you want to agree with it or not, it is having a behavioral impact, and that it is in this sense, perception is reality. And small business owners are very concerned about regulation, and I think anything we can do to help their psychology right now, we can start to overcome some of these kinds of things and the kind of thing you were just talking about.
I would just say that I think those regulations about yachts have been in place for a long, long time, so I don't think this is something new. I don't think it's something that President Obama did.
So I didn't say anything about administration.
No, you didn't.
I'll talk about fixes.
It may be. I don't know enough about it. It may be we should be able to simplify that regulation and make it easier to build yachts here.
But
we
what I'm
also
saying
see
is not just specific for this industry. We're talking about an environment out there where people are saying it's a uber regulatory environment that is constraining the growth of our economy in this country. So what I'm asking, you're real smart guys, because I was just a paratrooper in the Army. What are the type of things that we need to be doing coming out of Washington, D.C. to turn this around? Because as Mr. Ferreira said, when you sit back and you look at pro-growth economic policies, I don't want to see us be like Japan and start down the path of 9 or 10 stimulus packages and we have a lost decade. So what should we be doing to go and build upon this optimism and get away from this lack of certainty?
Can I address that?
Sure.
I discussed this in my book, and I served in the White House Office of Policy Development under President Reagan. And I went back and looked, what did he do to address the enormous crisis we had at the end of the 1970s, which was arguably even worse than this crisis. You had ended up with double-digit unemployment, double-digit interest rates, and double-digit inflation. There were 4 components he campaigned on and implemented once elected. One is reduce tax rates to maximize the incentives for production. 2 was reduce regulatory burdens to reduce the costs on production. 3 was to reduce government spending, to reduce the drain on the private sector. And 4 was a strong dollar monetary policy, which serves to enhance investment because investors are confident they won't lose money because of a declining dollar or because of cycles of boom and bust due to unstable monetary policy. Those policies work spectacularly. I call it the most successful economic experiment in world history. By 1982, the economy took off on a 25-year economic boom. What Art Laffer and Steve Moore called in their recent book the greatest period of wealth creation in the history of the planet. 20 million new jobs were created in the first 7 years alone. 50 million jobs were created from 1980 to 2007. Recently, that was reported in the Wall Street Journal. So if we would restore those pro-growth policies, the economy would take off in another long-term boom within a year or so, and that would be the way to solve the problem.
We also had pretty good growth during the 90s, during the Clinton years, let me remind you. In fact, maybe even slightly better growth. And President Reagan was a practical man. You know, he cut tax rates very heavily. He saw the big deficits that came about, and he agreed actually some very substantial tax increases that followed when he realized he had overdone it on the tax side, and that's what we have to do now. Obviously, we need to control spending. Of course we do. But we cannot, I agree with you, we cannot run these huge budget deficits, and we've got to attack that from both sides, the spending side and the revenue side, as President Reagan did.
And let me just add that there's an immediate situation and then there's a longer-term kind of situation. And what I was trying to say with a moratorium is that we really ought to take advantage of this opportunity with some increasing optimism out there and try and do something immediate. There are all kinds of other solutions, part of which is housing, but the immediate situation is we'll lose it if we don't act quickly.
Thank you. And Mr. Chairman, if I could ask one quick one. Could we have reinstated Glass-Steagall instead of going the direction of the Dodd-Frank?
Yes.
Thank you, Mr. Chairman. I yield back.
Thank you, Mr. for holding this important hearing. And I'll tell you, I'm still sort of new around here. I was just elected to Congress last summer in a special election. But I love being on this committee. I think the Small Business Committee is one of the more important committees back here in Congress because it really is critical, I believe, to the growth of our economy, getting things back on track in this country, creating more jobs. It's really about small businesses. And since I was elected last summer, I've made a point of touring and meeting with small businesses in my district, probably close to 100 now, individually, and talking to them about what I think we're trying to get at in this committee and in this Congress, is what can the Federal Government do or not do to really encourage growth in our small businesses, encourage hiring, and really help them do what they do best. And as you all know, there's a difference in small businesses. I'd like to ask Dr. Jacoby later in his polling, did you differentiate between the large small businesses and the small businesses? Because I do think they have a different perspective, particularly when it comes to regulations. And I think you're right. I think all of us want to find those regulations which may be burdensome, which may be out of whack, which might do better to be tweaked or not in place. But I, for one, am not interested in removing regulations that are there solely to protect the consumer or there to protect the health and safety of the worker. I'm not interested in that. But if we can look at other things that might be beneficial, I think we're all willing to do this. One of the things that I kept finding out when I talked to my small businesses, two things, which your poll actually pointed to. The second and third one was lack of consumer confidence and lack of consumer demand, which between the two of them is about 27%. So regulations was 22%. So to me, that's really the bigger issue that we need to focus on. What can we do to bring back consumer confidence and consumer demand? I participated in the Small Business Saturday on November 26th, which I hope we make that a bigger deal this year. Every one of the businesses that I walked into, small businesses, they said, Congressmember, we need more consumers. I want more people coming through my doors to buy my products, because when that happens, I can hire more people, and I'm willing to hire more people. But I need people who have their jobs. I need people who aren't losing their homes. I need people who are making decent wages. I want consumers. That's what's going to help my small business. The other thing I found overwhelmingly was a lack of access to capital. That seemed to be really just the common theme with all my small businesses. They didn't like the fact that we required way too much paperwork to even apply for a loan. So I've introduced legislation which will cut down paperwork and expedite approval process for loans under $250,000. And credit unions. Community banks, credit unions. Credit unions, under our regulations, aren't allowed to lend more than a certain percentage of their capital. They'd like to be more on par with banks. So I've also co-sponsored legislation that allow credit unions to loan more capital, which I think will benefit small businesses. And I think it brings back that in our community, we know our community banks and our credit unions. But beyond that, Dr. Bailey, you've touched on a little bit. I think it's these startup businesses. By the way, what we're finding in new statistics is some of these people that got laid off through no fault of their own, they're now looking to be entrepreneurs and innovators and start up their businesses, which I think is terrific. But what else can we do to help these startup businesses survive, thrive, and begin to hire people? Because we know that the biggest growth in hiring is going to come from our small businesses, not our large businesses. What else can we do specifically?
I'm not sure I've got a lot that's different from what we've already talked about, and I think I would agree with the things that you've said. Is what's needed is access to capital, and they need more consumers, so we need to follow a sound policy for the economy overall so that we begin to get that overall growth and we get more people coming through the door. Those are the main things that we need to do. I think, as I said in answer to an earlier question, if we can get more money coming from our small community banks, which are not really affected by Dodd-Frank, and I think the Small Business Administration, it's not huge, but I think that is playing a useful role also.
And Dr. Jacoby, and I know regulations. We are tackling that issue in this committee. I didn't hear that from one of my businesses that I've talked to. They were really more about access to capital and more customers. Did you differentiate in your poll between the large small businesses and the small businesses in terms of the burdensome regulations? And besides health care, are there some specific regulations that you've had, that you've uncovered in your polling that businesses are pointing to?
We didn't really break out the regulations by size. There's some, as we call it, sample size limitations on some of those kinds of questions. What we know is that businesses that say have more than $2 million in revenues or assets are more optimistic and tend to be more optimistic about credit than ones that are smaller than that. The others tended to be dependent on housing finance as part of their sort of capital source and entrepreneurship and all that kind of stuff. And that taking the housing finance system as it stands now has really hurt small business. Some kind of change to the housing finance system would help a lot. We'll look at that, but again, as I said, it's a sample size kind of problem. And it's not unusual that they would not necessarily mention regulations because they have a whole lot of things on their mind when they're talking to you.
Thank you.
Mr. Schilling.
Thank you, Chairman. I guess being a small business owner and actually currently still having my family run the small business, I've got to disagree with the statements about regulations aren't affecting our businesses, because I truly believe they are. And just like the gal before me, the Congresswoman, I just had a small business meeting just this past Monday. And I had a small business with 33 employees that they're in the process of going under. They've had no deaths, no major accidents. The business has been in place for, I think, 35 years. They do about $3 million a year in business. And OSHA has come out and fined them left and right. The first one they had was taking their fork trucks and forcing them to switch them from LP gas over to electric. But you know, just to give you an idea, this is coming from the real world. These are real numbers that I'm going to be telling you about, and these are factual numbers coming directly from my business. Back in January of 2009, I own a pizzeria store, and cheese has gone up 40%. Back in 2009, mushrooms from 2009 till today have gone up 44%. Pork has gone up 32%. You know, the problem is that I can't, in a downturn economy, I can't turn that over to my customer. And yet we have gas prices that are sitting at $3.50 to $4 per gallon, yet we won't allow for the Keystone Pipeline to be brought into the United States of America. We're going to send that over to China. But I guess the thing that I wanted to get at is with the Affordable Health Care Act, some call it Obamacare, call it what you will, but you indicated that a lot of the customers, folks out there, have less than 50 employees, and they really don't need to worry about being forced upon the plan. But my concern is the fact that the people with 53 to 60 to 62, the people that I've talked to have said, look, you know what, we're just over the threshold. Guess what they're going to do? They're letting people go. They're going to get under the part that's going to force them to be on the plan. So I think that we've got to take all that into consideration. You know, when we talk about the jobs created under the administration, you know, the fact of the matter is, under the administration, we've actually lost 1.6 million jobs since this administration has taken over. You know, it's you know, if you have $1 and you lose all of it, and then you find a dime, well, you've got a 10% increase in what you had. So, you know, that we've got to be really real. And I was happy to see that you, Mr. Jacob, that you were talking about the people that have quit looking for work, because that's important, because we're closer to 20%. We can all point fingers back here and there, but I think something else that we've got to do is we've got a bunch of bills that are bipartisan bills that are sitting over in the Senate right now, and what we've got to do is all of us take our Democrat and Republican, you know, we're here as U.S. members of Congress, and what we've got to do is we've got to come for some solutions for the American people. And I hate to go on a rant, but this is, when I'm hearing some of this stuff being right in what I call the final 3 feet of the business, and I hear people on over here telling us that regulations aren't adversely affecting small businesses in the United States of America, I cannot disagree with that more than anyone. And another thing we talked about a little bit is the fact that we have access to capital. You can't have small businesses if you don't have that access. I had a gentleman this week that I talked to that basically what's happening is they want him to, he wants to start up a restaurant. They want 50% down. He doesn't have 50% down. So we've got to figure out a way to find some solutions. We all know there's a problem, and I don't believe it's more stimulus. I'm sorry. You know, the administration told us that with spending $787 billion that we were going to keep unemployment rates under 8%. They also told us if we did nothing that today we'd be sitting at 6.5%. So it's not working, and throwing more of my kids and my grandkids' money to just continue to spend it away, I don't believe. What we've got to do is what our job is not to spend the taxpayer money. I believe it definitely is to create certainty. And that's to get all the ridiculous regulation. And we all want clean air, clean water, and all that stuff. But what we have to do is when they're coming out to regulate our farmers, the dust that they're putting up in the air, we've got to say, hey, wait a minute, come on, where are we going with this? But I think the key here is to find solutions to the problems and things that are going to really definitely help to fix the United States of America and keep jobs here rather than giving incentives for them to move jobs outside of the U.S. So I don't really have a question, but I had to kind of speak my mind on that, and that's coming from a small business perspective. So thank you, and I yield back my time. Mr. Schrader.
Thank you, Mr. Chairman. Small Business Committee usually is a bipartisan committee, or historically has been, and I'm sure we'll get back to that. And thank you all for being here. I'm sure you don't want to hear my political talking points, so I'll just ask a few questions and take advantage of the fact you all are here. And Mr. Jacoby, if you could go, your graphs are very illuminating and I think very helpful to give us a perspective. Do you have access to data that goes back further to get a more historical? Because it looks like today we're seeing the run up, and I'd like to see as we recover where we're getting back to the historical norm. Because as you all have pointed out, I think perception becomes reality. Certainly it is in our business, and it's now becoming true for small and large businesses in this country. Do you go back further in your data?
We have a lot of different data sources, but the daily measurement only goes back to January 2008. So that my reference is to 2008 to where the time just before or as the recession started.
That's kind of an unrealistic era and obviously led to the crash. So I was just trying to get perspective. Dr. Bailey, with regard to, you wrote or co-authored a Brookings deal last year, I believe, or 2 years ago in 2010, talk about economic conditions and not being present or conducive to businesses being able to get back on their feet or start up. Given this committee and its area of expertise, what should we be doing, do you think, with the SBA and some of these policies and programs to really get things going? You have to push your button, sir.
Push my button. Thank you.
We're pushing yours, but you might push ours once in a while.
Oh, don't worry about my buttons. I'm used to having them pushed.
All right.
With regard to the earlier questions, I do think it's important to take a hard look at the regulatory environment for small business and make sure that we are not putting in place, or we do not have in place, regulations that are really going to discourage growth. So I think everybody can get on board with that. That's a bipartisan thing. I think it's part of the Startup Act that I mentioned that's being sponsored in the Senate, and I think there are other bills being sponsored in the Senate. So it's not like I'm sitting here saying, regulation is always just great. I think we can do a lot to improve regulation.
Mr. Bailey?
I apologize.
I have limited time.
You have limited time. I think the things that we need to do right now are do the best we can to get the overall economy going, because that's eventually what's going to help small business. So that means dealing with the budget crisis and giving some modest stimulus in 2012. I think for small business specifically, we've talked about access to capital. That I think we're all agreed is a key item, and that has to come from private banks and make sure that they are doing what they need to do to provide capital to small business, and that the money coming from SBA is adequate to provide a supplement to that. I think that if we could, I think there's more that could be done to get more worker skills in place. And I think we are not doing a good job right now with the folks that don't go to college. And there are some technological advances. We're always looking for a quick fix. It's not a quick fix, but there are new ways of providing skills to workers. The Army is doing it, for example. They're providing skills to some of their recruits. I think businesses could learn a lot from that, and we as a government could act as a facilitator, just get people together and say, let's find out how we can train these workers, give them the skills that they need so that they can perform the jobs that small business and indeed larger businesses are looking for. Because skill shortage really is a problem. I mean, we hear reports there are 3 million jobs out there that are not being filled because the skills aren't available.
No, good. Those are very concrete. I appreciate that. Real quick answer, if I can, from each of the panel, talking about everyone's referenced the huge debt and deficits we face. We may argue over the causes and effects of those. There's several different proposals out there to deal with that, and I happen to believe, and I'm curious if you do, that with all the money sitting on the sidelines, not invested, people are concerned about where the country is going. Are we going to end up like Greece? I think that's we're already there in many respects. I agree with those statements, frankly. The Bowles-Simpson plan has had a lot of bipartisan support. Didn't quite make the grade with supermajorities, but we've done a pretty good job bipartisanly in cutting discretionary spending. We may not like the heavy-hand approach on the second cut here, but the discretionary spending is on a course downward, maybe not as far as some of us would like, but certainly more than others. But the big dogs are revenue and entitlements. Do you agree that revenues in some form or other have to go up a little bit and entitlements need to be cut significantly to get our country back on track? And just a yes, no from you guys, if that's possible.
I think revenue is absolutely important, and if you wanted to raise revenue, you'd lower taxes. It works every
like their
time.
Tax reform proposal? Talk about.
I don't know what it is, but I tell you, if you lower taxes at the margin, which is where it counts, you would raise revenue. If you're worried about small business startups and capital, you'd make the capital gains tax zero. But I don't think there's any incentive to do that.
If you could get back, if you could look at that report, because you're a good small business guy, I'd really love to get your opinion on their tax reform piece. If you could do that for me at some point,
I'd be happy.
If you don't mind, big request. I'm sorry, but if you could, that'd be cool.
Sure.
I like the Bowles-Simpson proposals. Some of them weren't as specific as they might have been, but I think it would have been a great framework to deal with the budget. And it proposes higher revenues and controlling the growth of spending, and I think that's what we absolutely have to do. I think they do propose lower tax rates, so lower marginal rates, but in return for that, you have to give up something because that doesn't give you more revenue. You've got to give up some of the special tax breaks or something like that if you want the lower rates, and I think that would be a great thing to do. I also would say that there's a proposal by Domenici and Rivlin, which I think in some ways I like even better than Bowles-Simpson, but either one of those I would take as a basis for dealing with this problem.
I think the Simpson-Bowles points in exactly the right direction. The only way you can raise revenues in this economy is by lowering the rates and creating incentives for economic growth. And I agree that you can go along with that and reduce some loopholes and some of the, because when you lower the rates, a lot of those loopholes become completely unnecessary and can be eliminated. So that does point us in the right direction. But I think that I like what Congressman Paul Ryan has been proposing in his budgets. He has a tax reform, 10% for families below $100,000, 25% for families above that. And so I think that is a stronger measure, but it goes further in that direction. I think that's the right direction to go. My entire testimony addresses entitlement reform, and the whole point of the testimony in the book is that entitlement reform can be done in a positive way. That it doesn't have to involve, oh, how much are we going to take away now from seniors and the poor? That, in fact, if you do structural systemic reforms, change the way these programs operate, they are so old, they're so based on ideas from 100 years ago, that you can produce programs that actually serve seniors and the poor far better, but cost just a fraction of what the current approaches do. And those reforms can involve pro-growth incentives that would contribute to the economy as well. And we discuss that in detail in the book and some in my testimony as well.
Thank you.
I think I think the real solution is a very rapidly growing economy. I think there's the potential there, and I know I'm not necessarily in sync with a lot of people on that. But we have not recovered, as was said earlier, from the downturn in any way like we should have. And that will change everybody's perspective if we really start going like we did after the Reagan recession. And to be direct, I don't agree with any kind of tax increases.
Mr. Walsh.
Thank you. Thank you, Mr. Chairman. Just if there's anybody on the panel that disagrees with me, say something. Are any of you four gentlemen at all satisfied with where we are at with this economic recovery? Is anybody satisfied with how this recovery is going?
Absolutely not. It's the worst economic recovery since the Great Depression. I've written on that recently, Forbes.com.
Dr. Bailey, are you satisfied with where we're at?
I'm not satisfied, but I would say that the administration, the Obama administration, should get a lot of credit for having turned things around. The banking system, the financial system did not fail. It was sustained.
Are you, Dr. Bailey,
the economy stopped falling.
Are you satisfied?
It fell like a stone.
I'll give you a chance. Are you satisfied with where this recovery is at?
Would I like it to be
no?
stronger? No, I'm not satisfied. It's still too weak.
Dr. Jacoby?
No.
Mr.
I don't think we've had a recovery, so no.
And that's a common perception.
Yeah, and as Mr. Ferrara pointed out, historically, the more severe the recession, the quicker and the more potent the recovery. And again, I think it's fairly safe to say that when it comes to economic growth and job growth, this is easily the most anemic recovery we've had since the Great Depression. And so what I want to figure out is why is that? What has this administration done, or not done enough of, or done too much of? We're all not satisfied to varying levels of degree here with where we're at. Be as concise as each of you can be. Why do we sit here in the midst of a historically weak recovery, if you in fact want to call it a recovery? Why are we where we're at? Try to be as concise as each of you can be. Let's start down at that end.
I think we're actually living the 1930s all over again, because it was a recession that was extended through government action, and there were just asinine programs started during that time period that kept this country in a recession until after World War II, when there was a change in the Congress.
So to paraphrase, too much government.
Absolutely.
Dr. Bailey, why are we, what have we not done enough of? What have we done too much of? Why are we where we're at right now?
I think we're where we're at because this recession was very different from the earlier ones in the post-war period, because it had this incredible housing bubble, and housing prices have dropped 30%. We lost $14–15 trillion worth of household wealth. We don't have residential construction as a lift to the economy. Consumers don't have the value in their homes, which allows them to feel more confident and spend more. And so I think the only thing that could have been done more was more emphasis on trying to turn around the housing market, although the truth of the matter is it's a very hard thing to do. And so inevitably we were going to get a long recession. The other thing was that if we had not had deficits coming into this recession. In other words, when I was chairman of the Council of Economic Advisors, we had a 2% of GDP surplus in the budget. And if that had not been squandered in 2 large tax cuts, we would have come in with more ammunition to deal with this downturn.
Mr. Ferrara.
I discussed in my testimony each of the 4 components of Reaganomics. And the reason we have no recovery is that Obamanomics is following the opposite of every one of those 4 components of Reaganomics. Next year, I talked about Reagan reduced the tax rates. Next year, you have already scheduled in current law increases in the top tax rates of virtually every major federal tax. The only one left out is the corporate income tax, which is already virtually the highest in the industrialized world and is already too high. Instead of reducing regulatory burdens, we have increases in regulatory burdens. Instead of reducing government spending, we have massive increases in government spending. Instead of a strong dollar monetary policy, we have a weak dollar monetary policy. So that is why we have no recovery.
Dr. Jacoby.
The recession since World War II and since the Great Depression have had a housing cycle embedded in it. This time we had a financial crisis. I don't think people have adequately assessed the financial crisis and therefore haven't adequately assessed what needs to be done to change that. But the big problem is the finance system is not working the way we want, particularly in housing. And I think that's the key of the problem.
Mr. Ferraro, one final quick question for you. Dr. Bailey testified that Obamacare will actually help small businesses and won't increase their costs, which I find mind-boggling. Would you care to comment?
Yeah, I think Obamacare is very detrimental to small business. It's already increasing health costs. And so, it's not just, in addition to the point that was made about companies just above the threshold, there's also a negative impact on companies just below the threshold that don't want to grow up to 50 and above. And so it's reducing job growth in that way as well. And what you've seen is instead of increases moderating, they seem to be accelerating, which is what I predicted in my book.
Thank you. Thank you, Mr. Chairman.
Mr. Mulvaney.
Thank you, Mr. Chairman. I want to go back to something that Dr. Bailey talked about a few minutes ago and that Dr. Jacoby also mentioned, which is housing. I used to build houses. One of the reasons I'm here is that I used to build houses. I've heard a lot of different ideas. We've had half a dozen or so Federal programs designed to try and help the housing industry. I agree with you, Dr. Bailey, that this is a crisis within this industry that we've not seen, certainly in my lifetime or my dad's lifetime. I come from 3 generations of home builders. So I guess, since I've got fairly smart people on the panel, some of whom I might agree with philosophically and disagree with philosophically, I'll ask you all the questions. We'll start with Dr. Bailey, and then anybody else come in. What would you do? I'm open-minded to ideas on how to fix the housing industry. And maybe a corollary to that, if you don't have any ideas of what to do, is what shouldn't we be doing? But I'll start with Dr. Bailey, and we'll just take it from there.
I wish I had a better answer to give you. There have been a number of programs that have been tried, starting with the Bush administration, and I think those were generally good programs. The Obama administration has tried a number. There's a new one that's being announced today. I support many of those programs. I think they are trying to the problem is we have very low interest rates, but people can't refinance their loans or they're underwater from it. So you've either got to wait this thing out for another year until the housing market really comes back, or you've got to start paying off the people who are underwater. And I think there's a lot of reasons to be nervous about that. You'd end up paying nearly a quarter of the money would go to California, since that's where a lot of the underwater mortgages are. So I don't know that there's easy solutions. I think the programs that have been tried are helping, but they can only do a limited amount, and unfortunately we've got to wait this thing through to some extent. And by the way, I agree with Dr. Jacoby that the financial crisis also contributed to where we are now.
Let me press you to that, because I think that may be where we are right now, which is where the financial situation is also hampering a recovery in the housing market specifically. You mentioned low interest rates. There have been low interest rates now for the last 2 or 3 years. Folks are not able to refinance in large part because of the regulations that exist on banks and what limits they can do on lending. So I hear what you're saying about waiting it out, but unless we allow banks to flush these products through the system, allow housing to actually find a bottom, are we really going to ever get to the end of it? Anybody?
The housing finance system, it's a long discussion. I go back to the days of the thrift lenders and the community lenders and that kind of thing. And a lot of what has happened had to do with the whole secondary market and the disconnect between finance and the actual borrower in the marketplace. And my solution is to tie those two together again. I think you need to create some kind of active community lending where it's profitable for a small bank or a credit union or a thrift to actually make a home loan, deal with the borrower, not have to send it off to some investor, and all of these different processes that go through that have created a major disconnect in the housing finance system. And I don't think you can do that with the current housing finance structure, which is with Fannie Mae and Freddie Mac. So something has to be rebuilt in the private sector that will allow homeowners and people to actually take some risk in the housing market for some period of time. What we've done is we've created a situation where nobody profits from making a home loan. And that is that
you collateralize it, securitize it, package it, and sell it off, right?
Well, and you get a fee in that process, and if you can do a lot of them, you get a lot of fees, perhaps, and refinance fees. But it's just it's a very difficult thing. You need to have community lenders who are invested in the community and who have an interest in making sure that you pay that mortgage loan off and that you start the process over again, because we did that for many years and we destroyed it over the last 20 years or so.
Mr. Farrar? What I'd like to say is if you try to focus on just the housing sector, then I think there are no good answers. What government interventions will help the housing sector? I think there's no good answers. What I want to urge you to do is to focus on the general economy. If you create a booming economy by following pro-growth measures, then the housing will take care of itself. And so I think that's the basis of the solution. And the bottom line on that is to focus on incentives for production, incentives to maximize investment, production, business startup, business creation.
I don't want to cut you off. I only got 19 seconds. And believe me, you're one of the ones that I would typically agree with philosophically. And I'm wondering if we're in a situation here where it's in a unique circumstance, whereas, and I posit this just for sake of discussion, that our ability to create this environment that would lead to the economy that you've just stated, which is what everybody up here wants, is a question of how we want to get to that, is severely hampered by the inability of labor to move to where the jobs are, and that the housing market is saddling and anchoring this economic growth that we might be able to find, and that unless we're able to find a way to allow capital markets to function again, to allow labor markets to function again, that we're not going to get to that point. I am not for government intervention for the sake of government intervention. I'm just wondering if there's something that we could do to allow the natural forces of the economy to do what you've just described.
Well, you focus on, see, the four principles of Reaganomics are based on fundamental economics, and that has not changed. And so the key is to focus on the incentives and taxes, regulations, monetary policy. What incentives are they creating? And how does that affect the overall economy? And the fundamentals of economics remain. Businesses still start and exist to make a profit, to act in their self-interest. And so just take advantage of the fundamentals of economics, and you would create another economic boom if you did.
Thank you, sir. Thank you, Mr. Chairman.
Ms. Clark.
Thank you, Mr. Chairman, and thank you, Ranking Member Velasquez. And I'd also like to thank the panelists for their testimony today. You know, just today, the American Sustainable Business Council, in conjunction with the Main Street Alliance and Small Business Majority, released a poll indicating that consumer behavior is the #1 concern by far, with 34% of respondents pointing out that this is the biggest obstacle they face. Government regulations were a distant third at 14%. This coincides with what my constituent small business owners tell me is their #1 concern, along with access to capital. This meshes with the basic economic fundamentals. If consumer confidence is low, industry has no incentive to add fixed costs, which in this case would be adding jobs, which is why I'm having a little difficulty reconciling in the somewhat vacuum-like argument being made today that government regulations are hindering small business from hiring. So I have two questions. My first question is to the entire panel. Would you help me better connect the dots that point to government regulations as a bigger detriment to the viability of small business than would be stagnant or further dips in consumer confidence? And then to Dr. Jacoby, can you explain to me the difference between consumer confidence and a lack of consumer spending as concerns for small business owners? And I ask because if you add the two percentages, the sum of the consumer behavior makes it the #1 obstacle facing small business owners in the Gallup poll.
Should I begin? Couple things. I think it is arguable to say that major concerns on the part of small businesses are a lack of revenue, a lack of consumers, a lack of consumer confidence. And as I mentioned, we went through several different kinds of questions trying to get at that. I think it matters how you ask the question. And it also matters what the environment is, what people are talking about, and all those kind of things. I think, however, that however we ask the question, that comes up, and that is something that, for example, you can do something about, whereas I don't think you can do a lot about some of those other factors that are affecting small business. It's very hard for you to drive revenue to a small business. However, all I'm saying is that whether it's true or not, whether people want to make factual arguments or not, there is this perception that exists out there. And in a behavioral economics context, I'm just arguing if you can help that perception, if you can help change that perception, even for a period of time until the economy gets going better, until the small businesses are doing better, I think it's a plus.
Well, businesses look to the future, what's coming down the pike. And you have, for example, a very activist EPA that is on a regulatory crusade that is eventually going to reach down to all businesses across the board. If they're going to achieve what they say they're going to achieve, sooner or later they're going to walk in the door and they're going to say you can't do what you're doing. And they don't want to, an investor doesn't want to put $1 million in a line or sign for a loan for $1 million you're supposed to pay back if they don't know what's going to happen when that comes to.
That begs the question why small business owners didn't just say EPA regulation. They said consumer confidence, consumer spending. This is what they said. We're not, and I've yet to hear anyone in my district, and I have a small business-laden, we're talking mom and pops, who've said to me, I'm so scared that the EPA is going to come down. They're concerned about who's coming through their doors each and every day.
Well, in your district, they may not know about that yet, but it is affecting other businesses, and that's my opinion. That you asked for. There's also the employer mandates negatively affecting businesses. We've discussed that before, which it's not only the requirement to buy insurance, but it's like what's coming down the pike and what's that insurance going to have to be to satisfy what HHS is going to demand to satisfy the mandate. And so that is a threat to even companies that are already providing insurance. Is this going to raise my costs?
Mr. Ferreira, I got your point, but my time is limited. I did want to hear from Dr. Bailey.
Well, I think your sentiments are right. I basically agree with what you're saying, that it's really getting the customers in the door that's the biggest problem for small business, and I think that's what they say. Yes, they've gotten concerned about the health care, but actually existing plans are basically grandfathered in. So I think you should be reassuring your small business friends that they're not necessarily going to face a big change as a result of the ACA, and they may even get some benefits. But basically, consumer confidence, consumer spending, we look at what consumers do, and if we can get them spending, then small businesses are going to feel better. There's a chart in my testimony which shows, it's from the NFIB, and NFIB is not a big fan of regulation or the ACA. But if you look back at their chart, the level of concern about regulation was high when the economy was weak in the early 90s, and it's high again now. So I think if we can get the economy going, that concern is going to fade off. It's not going to disappear, but it's going to go down again.
I think you have to divide the types of businesses. I think most of what you're talking about are retail businesses. So it's a blend. But when you think about it, for small businesses, especially retail ones, for people to come in their doors and buy something, those people have to have jobs. So the way I would look at it is, how can I create an environment in this country where it isn't so expensive to employ people vis-a-vis the rest of the world? And we're on the high end of what it costs to employ people if you look at countries that we compete with, like China, Vietnam. Oh, no. Well, believe me, there'll be one right behind them. I mean, Bangladesh, India, there's lots of poverty in the world. So that's what you have to look at. You have to look at how can I allow our people in this country, our employers, to employ people, and let's reduce their cost. So, now, I'm not talking about wages.
I was going to say, what you just implied there is that we should be competing with the wages of like a Bangladesh or India, which I don't think the average American could go for.
No, we don't have to do that, because we have an infrastructure here, and we are much more efficient and productive than any other part of the world. So we don't have to compete on wages. We don't, and we shouldn't. But But what you do is the regulatory burden is cumulative. It just makes it so expensive to employ somebody that it goes elsewhere. It goes like I just bought the new iPod, and I thought this thing is really cool. It was developed here. It is the neatest product I've seen. It's made in China. It was never made here. It went right there. We did all the brain work on it to develop, and we produce it in China.
Mr. King.
Thank you, Mr. Chairman. First, as I open this up, I regret the gentleman from Oregon's not here. I hope someone passes him along the message. He seems to be pretty thin-skinned about partisanship. I was listening to the gentleman from Illinois' statement about running the pizza place, and even though I'm kind of happy about pork prices going up 30%, I didn't hear anything partisan in there except the phrase Obamacare. And I'd point out to the panel that to my recollection, and I think it could be easily referenced, that phrase was given life and momentum and perhaps coined by the President himself on February 25, 2009 at the Blair House. We remember that healthcare summit that's there. And so when I'm looking through the polling results, the Gallup poll results, I'm actually surprised at these results, Dr. Jacoby. In that I started a small business in 1975. I'm at payroll for over 1,440 consecutive weeks. I sold that business to my oldest son, and it and a spinoff of it go on today dealing with all these government regulations. I'm pretty sure if I ask two of my sons that are in that business now what the number one issue was, we would have probably gotten Obamacare as the biggest load that they would be facing. And I see that down there. Well, wait a minute. It's a new health care policy at 5%. Now, I'm wondering if some of the people that said complying with government regulations at 22% aren't also thinking of Obamacare as at least as a component of that. But I'd ask you to speculate. If that had been phrased differently, the way Mr. Schilling phrases it and I phrase it, what kind of a response do you think there would be a change up or down in that number of 5% on the new health care policy concern?
Well, it's not real good to speculate on the question design and responses. My guess is there is some mixing in that area. If you look on the testimony after those two tables, and then I have a part that starts that talks about the worries, and when we asked people why they weren't hiring. And if you look down that list, you see that potential cost of health care is the 48%, and then the government regulations is 46% in terms of where we allowed them to have multiple answers. Now, those answers come after statements about revenues and cash flows as major concerns of small business, but they're all there in the top 5.
Well, thank you, Dr. Jacoby, and I think you've added clarity to this. Just a quick read of the poll doesn't go as deep as what you have in. And I would add to our background on this, the special election in the state of Ohio that took place perhaps a month and a half or so ago, and it was for the purposes of repealing the collective bargaining legislation that was passed there and signed by Governor Kasich. So, I mean, we know that there were tens of millions spent to get people to the polls. It was a union-heavy turnout. 61% rejected the collective bargaining language. And initiative number 3, right behind the initiative number 2, which I've mentioned, was to exempt Ohioans by amending their constitution to the individual health care mandate. And that passed, and they amended their constitution with 66%. So I thought that was a pretty powerful poll on the public's acceptance of Obamacare. And would you care to comment on that, Dr. Jacoby?
I think that the way we phrased it in our question was the cost of health care. And the way most Americans and small businesses, I think, are perceiving whatever you say about Obamacare is in the cost of health care to them.
What's the average size of the businesses that were polled?
The poll, there are businesses that have less than $20 million in revenues or sales. Most of them are under $1 million.
The numbers of their employees, do you have that?
No, I can give that to you, but it's a relatively
up to
small
20 million. Thank you. I'd turn then to Dr. Bailey and ask, what would, in your estimation, be the grandest Keynesian experiment in the history of the world? The largest, most expansive, grandest Keynesian experiment?
World War II?
Oh, I didn't expect that answer. Because I thought we were fighting to defend liberty and freedom, and it wasn't a Keynesian experiment at all. And I've never heard it expressed as a means for our economy to recover.
But it did. It did. We got very large government spending. And we
that would be the president's theory as well. I'm going to give you how about we go with a multiple choice here? because that Keynesian experiment did not begin at World War II, and we know that. It began with the initiatives of perhaps the Iowa president, and then certainly with the New Deal of FDR. There was a follow-through of that under the same president all the way through. Then I'll ask you this. Do you know when the stock market recovered from its peak in October of 1929, when it finally got back to that level?
No, I don't.
Does anyone on the panel know that answer?
I think it was after World War II, I think.
Yes? Mr. Frederick?
Well, I was just going to say 1946.
1954.
Oh.
FDR had been dead for 9 years by the time the grand Keynesian experiment came back around to breaking even. And so that's a depressing thing to think about, the Great Depression, how long it took to come back from the Great Depression.
If you give me a second crack at that, I'd say Europe is providing a very good Keynesian experiment. They're all trying to reduce spending and raise taxes, so and they're all finding they're going into recession as a result. So that's the other side of the Keynesian coin.
Well, the Germans are doing pretty well and have all throughout.
Yeah, but they didn't do any contraction.
That's true, because they didn't experiment in the Keynesian fashion that the rest of Europe did. Because they fear inflation and they fear interest rates. But Mr. Ferrara, I wanted to ask you, if we were to, as a former Massachusetts governor has advocated, repeal Dodd-Frank, the Community Reinvestment Act, privatize Fannie Mae and Freddie Mac, and repeal Sarbanes-Oxley, what do you think would become of our recovery?
That would be a very good component on the deregulation component of the 4 points of Reaganomics that I mentioned. And I just want to say on that grand Keynesian experiment, World War II, check out what consumers happened to the trends in consumer spending during World War II to see if that really was a Keynesian experiment. I think you'll find that it was not having any kind of Keynesian effect, and that's why the recovery didn't really come till later.
And just in conclusion, as my time is wearing down here, does anyone have the answer to, here are the unemployment numbers, how many are unemployed, how many are no longer qualified to meet the category of unemployment? Does anyone have the answer on how many Americans are of working age who are simply not in the workforce?
Yeah, I think that's gone up recently. I think that's been going up. The Bureau of Labor Statistics has has that data.
Let me just respond to my own question then, and that is, I've tracked this for 6 or 7 years, and there are different ways to define it. So you say Americans of working age not in the workforce. That number, roughly not quite 14 million unemployed, added to those off the Department of Labor's website. I started at 16, and I went to where unemployment is no longer paid and where Walmart doesn't hire. That is 74. Over 100 million Americans of working age simply not in the workforce. I just think that's an astonishing figure and worthy of consideration. I think your book's worth reading, too. Thank you very much, and I yield back.
Mr. Richmond.
Thank you, Mr. Chairman. Thank you, Ranking Member. And I don't want to oversimplify this, but most of our decisions and opinions are based on real-life experiences. And watching my parents operate a number of small businesses, one of which was electrical contracting company, if no one was building, they weren't hiring. If people weren't building homes, they weren't doing any electrical work. If government buildings weren't being built or retrofitted, they weren't hiring. So I understand the question about government regulations and those concerns, but are we overplaying the role of regulations compared to opportunity and demand? And if you can give me a short answer to that, I have another one also.
Well, go ahead.
Well, the thing is that if you get a booming economy, then the prices of homes go up. People want to buy homes. There's more demand for homes. And so the focus needs to be, the regulation is just one component of a broader array. It is one real component, but it's a broader array. And so the real focus needs to be get the economy overall booming, and you will solve the housing crisis. You'll solve the consumer confidence crisis, and you'll solve that is the best way to solve the fiscal crisis too. You got to have economic growth, or you're never going to deal with the deficit. You're not going to be able to deal with the deficit until you get the economy booming again.
Let me just mention one number. According to our surveys, 29% of small businesses are hiring fewer people than they think they need. They're holding back. And there's a reason for all that caution. And what I'm looking for is anything that can ease that caution, at least temporarily, until once they get more optimistic, then I think what you said has a lot more power to it.
Now, since you brought up optimism, does a dysfunctional Congress add or subtract to consumer confidence in this country?
It clearly hurts consumer confidence. Our numbers from last year as to what happened in August, where we almost talked ourselves into a double dip, clearly Congress can have an impact on the economy directly.
Mr. Frederick, I pronounced it right?
You did.
Quick question, and I read sort of your bio and that you took a leap of faith after 9/11 to start your own business, and it reminds me of what my parents did. So my question to you would be, as you were purchasing that company, was the number of rules and regulations and the regulatory environment, was that a part of your analysis when you looked at it, or did you look at balance sheet, the assets, the income, the debt, and the revenue?
I didn't look at the regulations. I can tell you that. I should have, but you know, when you're not in the business, it's amazing what you don't know. And there are lots of things, but it's gotten worse and it's accelerated. But can I answer your first question about your parents and their business? The amount of regulation that goes into building a new building is just unbelievable. Not so much at the federal level, but at local levels too. And it raises the cost of building to a point where people don't build. And the second point I would make is you should sponsor the repeal of the Davis-Bacon Act, which forces people to employ union labor when, I don't know if were your parents, did they run a union shop or a non-union shop?
They ran a non-union shop, and then they had jobs that were also prevailing wage.
See, they got discriminated against because they could have gone in at a lower price and said, look, we can do the same darn thing at a lesser rate. They said, oh, sorry.
Well, you mentioned the regulations for building, and I would just tell you, as dreadful as 9/11 was, and it highlighted our policies on terrorism and inadequate security at airports, being a survivor of Katrina highlighted the fact that you need real building codes, and you need to make sure that levees can withstand water, and that we have some very basic standards. Do I think we can simplify the language we use in writing every document in this government? Absolutely, and I think that should be how we categorize the conversation, how we talk about it, which is to simplify things as opposed to just say over-regulating. But we need to make sure that we build safe homes that can withstand 100-mile-per-hour winds and things of that nature. And I think government does have to play a role in making sure that that doesn't happen, so that we will have homes that survive an earthquake, and we, God forbid, would ever have anything like Haiti. But building codes and those things make a difference. But I think the conversation and what would increase consumer demand and consumer confidence in this country is if we could get together and have a conversation about how we simplify stuff, how we make people really understand it. Why is the tax code bigger than the Bible? You know, all those things, those are real conversations we should have, and I think we owe it to the American people to do it, because we talk a completely different language than people every day just trying to figure out how to build a home, how to pay for it, how to go to work and save money. So that would just be my 2 cents, and if you all wanted to reply, you can, but I'm out of time, and Mr. Chairman, thank you for allowing me to go over.
If anybody wants to reply, they can. Mr. Shabbat.
Thank you, Mr. Chairman, for holding this hearing. I don't want to repeat what a lot of others have already said, so let me come at it a little bit differently, but I'm sure some of it has already been mentioned. The President, during his State of the Union address last week, called for regulatory reform. I would argue, if you look at the actions from this administration, however, any involvement that they have had relative to regulations has been anything but reform. It's been more and more regulations. And in fact, last year, the Obama administration proposed over $230 billion in new regulatory proposals, which would have, one survey showed that it would have meant another 133 million paperwork hours on businesses. And with that amount of paperwork, it would have taken close to 66,730 additional employees just to comply with the law. And I guess you could argue that, well, there's jobs there, but I think clearly those aren't the type of jobs that are going to make this a more efficient economy and make us more competitive around the world. So I think it's clear that these burdensome regulations really remain a thorn in the side of this economy. And one of the reasons, only one, that we haven't seen the recovery that I think we would have expected. Dr. Jacoby, in your poll, it indicated that government regulation remains the #1 concern for small businesses. And I know one of my colleagues on the other side had another poll that indicated something different. I know I've talked to an awful lot of small businesses in my community, and I hear over and over and over again that government regulations is a big deal. And another one of my colleagues on the other side mentioned a dysfunctional government, and it clearly is that. But I would argue that dysfunction is in the Senate and not in the House. When you look at regulatory reform and getting rid of burdensome regulations, the House has passed something like 30 bills, which are sitting over in the other body, and absolutely nothing is happening over there on these things, or much of anything else. As of last week, they hadn't passed a budget in 1,000 days, which is almost 3 years, despite the fact we're supposed to pass a budget every year, and the House has, but once again, not the Senate. But I think the dysfunction is over in the other body. Dr. Jacoby, if the Senate and this President perhaps would push the Senate into actually passing some of those 27 to 30 bills, and I've got copies and could name what they all are, but I don't want to bore you with all those things. If we actually pass some of this deregulation, getting the government the heck off the backs of these small businesses, would that arguably have a significant effect on small business creation in this country?
There are a couple of different factors, obviously, in that process. What I was trying to talk about was just a freeze, because that, to my mind, would actually have a positive effect immediately. I think when you talk about the others, it's a matter of what's being deregulated and all those details that you talked about. It certainly should have a positive impact. The question is how much depends on, everybody views deregulation differently or regulation differently.
Okay. And also one of my colleagues indicated the tax code being, more than a Bible. And it's actually 8 Bibles stacked on top of each other is how complicated the tax code that both individuals and small businesses have to deal with in this country. What a waste of time that could be more profitably used to better run that business and maybe actually hire some folks. The other thing that I heard over and over again from my small business folks was how tough it is to get access to capital. And one of the things that's been that's attributed to, among other things, is the Dodd-Frank legislation. What I've been told is, the banks and folks that would lend the money are now, they got the regulators looking over their shoulders even more, and it makes it tougher for them to lend out money, and so the businesses aren't growing. Would anyone want to comment on that, any of the panel members? Yes, sir.
When I spoke, and I understand that maybe he's not subject to Dodd-Frank, but in general what it does is it makes it more of a process than a relationship in lending. And ratios and statistics don't pay loans back. Individuals pay loans back, and it's a matter of honor that you do it. And he thought that regulation, the Dodd-Frank regulation, was changing that dynamic. It was changing it more from a relationship business, which it is, to just a numbers business where, you fell out of our statistical acceptability range, so you got to go. We're calling your loan. We would have been long gone, our company, long gone, early on in our lifetime. I would have lost everything. Lost my house, lost everything. I personally guarantee the debt, and I still do. So I think it moves that. And if we didn't have a relationship I wouldn't be here today talking about it. So,
If you look back to the period of the boom, I think we did not have effective regulation of the financial system, and that contributed to the crisis that we got into and contributed heavily to the recession and the unemployment we have now. So I think that was necessary to revisit the regulation of the financial system. I think that Dodd-Frank could have and should have been a bipartisan bill. I think it came very close to being a bipartisan bill, but there was a decision at the end of the day to say, no, we're not going to go along with that. Maybe it would have been a better bill if it had been a bipartisan bill. So I think it's an example of a dysfunctional Congress that we didn't have a bipartisan bill on that. I do think that regulators now are looking over the shoulders of the banks and probably being a little bit too cautious. I think that would have happened with or without Dodd-Frank because, you know, they were on the beach back in 2005 when a lot of these crazy loans were being made.
Mr. Farrar?
Well, I think the answer to your question is yes. I think the Dodd-Frank is one of the components that is perpetuating the lack of any recovery, and I think a fundamental factor too in the credit market is incentives as well. Venture capitalists, for example, they are very sensitive to all these tax burdens, the tax rates, and they do look down the line. So it's hard for companies to get venture capitalists if they think the capital gains rate is going to go up. Historically, that's proven to be a very powerful factor affecting venture capital. And a point about the dysfunctional Congress, I want to note that one very good measure that the House passed is the REINS Act, which would reestablish constitutional control over regulations, and it's something that the other body really needs to move on.
Thank you very much. Yield back, Mr. Chairman. Thank you for holding this hearing.
Velasquez? Do you have any more questions?
Well, I don't know if my colleague was referring to impacting access to capital for small businesses as a result of Dodd-Frank. Were you referring? No,
I didn't quite catch it.
The lack of access to credit, to capital, to small businesses
yes.
as a result of Dodd-Frank.
Yes.
And my argument before to that assertion is the fact that Dodd-Frank exempt community banks who have assets less than $10 billion. And for the most part, those financial institutions that are providing capital to small businesses are those community banks that are exempted from the Dodd-Frank. And here we have a chart from the Thomson Reuters PayNet Small Business Lending that shows clearly since Dodd-Frank was enacted, credit has been going up. So, there is this perception that is not based on the facts. Thank you. And I yield back.
Well, I want to thank all of our witnesses for being here. Obviously, small businesses are plagued by a number of things. That lack of available credit that's been there, obviously regulation that's hanging out over them, the idea that they've got a tax increase that's coming very, very quickly. If something isn't done about that, I think that's having a huge effect. And when 7 out of every 10 jobs in this country are created by small businesses, that's where our problem is with economic growth. But I want to thank all of our witnesses for being here. I appreciate all of your testimony. And this hearing is not quite adjourned. I do ask unanimous consent that all members have 5 legislative business days to submit statements, supporting materials for the record. Without objection, so ordered. With that, the hearing is adjourned.